Good evening. I hope you all had a great day. Shares gained as the market started off the new quarter strong. Gains were due to news stating that Pfizer's coronavirus vaccine helped immune responses in patients with the virus. The report did say that side effects did occur, such as a fever. Two of the three major indices ended in the green. The Dow ended lower by 0.3%, while the S&P gained a better 0.5%. And the Nasdaq ended the day up an even better 0.95%. Starting off with the economic news, numbers seemed overall pretty positive. More than half of the U.S. manufacturers reported a better than expected expansion in the month of June. In fact, 52.6% of the companies said that their businesses are growing, beating economists' estimates of a reading of 49.5%. This number is up from May's reading of 43.1% and April's slightly worse 41.5%. Quote, as predicted, the growth cycle has returned after 3 straight months of COVID-19 disruptions. Demand, consumption, and inputs are reaching parity and are positioned for a demand-driven expansion cycle as we enter the second half of the year, according to the chair member of the ISM, Timothy Fiore. Only 5 of the 18 industries surveyed reported contraction for the month. Expansion was best among textile mills, wood products, and furniture and related products. Employment increased by 10 points to a reading of 42.1, while production improved an even better 24.1 points to 57.3. New orders rose 24.6 points to 56.4, and prices increased from 40.8 to 51.3. On top of this news, private payrolls grew in the month of June as the national economy slowly began to ramp up again. Private payrolls grew by 2.37 million for the month, but was slightly lower than the expected increase of 2.5 million, according to the ADP. The ADP count comes the day before the Labor Department releases its official non-farm payrolls count for June. Currently, economists are looking for a gain of 2.9 million. Today, the Federal Reserve released the minutes from its meetings on June 9th and June 10th. Officials at the meeting noted that, quote, the current stance of monetary policy remained appropriate, end quote, but said the Fed should strengthen the guidance it provides to markets. The minutes noted a need for, quote, highly accommodative monetary policy for some time, end quote, and said the conditions for that should be spelled out clearly. Quote, in particular, most participants commented that the committee should communicate a more explicit form of forward guidance for the path of the federal funds rate and provide more clarity regarding purchases of Treasury securities and agency mortgage-backed securities as more information about the trajectory of the economy becomes available, according to the minutes. The committee also released its expectations for GDP. The median GDP projection for 2020 was a contraction of 6.5%, followed by an increase of 5% in 2021 and 3.5% for the following year. Quote, participants commented that there remained an extraordinary amount of uncertainty and considerable risks to the economic outlook, end quote, according to the minutes. Officials also noted that the fiscal help Congress provided for households, businesses, and state and local governments, quote, might prove to be insufficient, end quote. In addition to the talk of yield curve control and forward guidance, members also discussed the impact of asset purchases. Some officials noted that, quote, constraints, like already low yields in the current environment, are making the purchases less effective than they were in the wake of the financial crisis in 2008, though Others said the purchases can still be effective. We had another daily dose of coronavirus news today. Notably, the World Health Organization said that some countries may need to go back on lockdown due to the rapidly spreading coronavirus outbreaks. Quote, some countries who have had success in suppressing transmission, who are opening up now, may have a setback. They may have to implement interventions again. They may have to implement these so-called lockdowns again, end quote, according to Dr. Maria Van Kervoke, head of the WHO's Emerging Diseases and Zoonosis Unit. She insisted that countries must ramp up testing, build tracing infrastructure, encourage the public to wear masks, and practice physical distancing. She then added, quote, countries that have adopted this comprehensive approach have suppressed transmission and saved lives. However, we're concerned some countries have not used all the tools at their disposal and have taken a fragmented approach. These countries face a long, hard road ahead. In addition to this, a Yale study found that the number of confirmed U.S. coronavirus deaths are incorrect by a potentially large degree. Dan Weinberger, an epidemiologist at the Yale School of Public Health and a lead author of the study, said, quote, our analyses suggest that the official tally of deaths due to COVID-19 represent a substantial undercount of the true burden, end quote. Researchers compared the number of excess U.S. deaths from any causes with the reported number of weekly U.S. COVID-19 deaths from March 1st through May 30th. The numbers were then compared with deaths from the same period in previous years. They found that the excess number of deaths over normal levels also exceeded those attributed to COVID-19, leading them to conclude that many of those fatalities were likely caused by the coronavirus but not confirmed. State reporting discrepancies and a sharp increase in U.S. deaths amid a pandemic suggest the number of COVID-19 fatalities is undercounted. Trump also made comments on the virus today. In fact, he said that he is, quote, all for masks, end quote, but then later said, quote, I don't know if you need it to be mandatory, end quote. Trump then turned goofy, saying, quote, usually I'm not in that position. Everyone gets tested before they see me, end quote, and then added, quote, I had a mask on. I sort of liked the way I looked, end quote. Not to be political, but you think if Trump was such a businessman, he would listen to Goldman Sachs research, which states that by wearing masks, the U.S. could add 5% on to GDP, which we otherwise wouldn't have. Regarding coronavirus relief, Trump claimed that he supports another round of direct payments to Americans and actually wants to give out more money than the Democrats have already offered. He said, quote, I do. I support it, but it has to be done properly. I support actually larger numbers than the Democrats, end quote. Notably, the president did not seem eager to implement more unemployment benefits. He said, quote, we had something where they wanted where it gave you a disincentive to work last time. We want to create a very great incentive to work. Also, it was an incentive not to go to work. You'd make more money if you didn't go to work. That's not what the country's all about. We want to create a tremendous incentive for people to want to go back to work. Apple led the way with retail closures yet again, as they announced that they would be closing an additional 30 stores, which now brings its total store closure to 77 stores in the past few weeks. The state of California even announced that it will be closing various indoor businesses, as the state is experiencing a surge in cases. Indoor businesses required to close include restaurants, wineries and tasting rooms, movie theaters, family entertainment centers, zoos, museums, and card rooms, according to Newsom. The updated guidance will remain in place for at least 3 weeks. The governor added that he doesn't want the businesses to close entirely, but recommends that they move to outdoor operations if that option is attainable. Lastly, the US reported its second highest number of daily coronavirus cases, as 40 states announced that new cases rose by more than 5%. Arizona is beginning to near max capacity of intensive care unit beds, with 1,495, or about 89% of the state's ICU beds, currently being in use. The sector performance today was very polarizing. Two sectors performed very well, while one sector suffered immensely. The two large gainers were utilities and consumer services, which gained 2.5%. No one performed worse than the oil and gas industry, as shares were the opposite and were down more than 2.5%. The table shows the interesting day of trading. Value was crushed, while growth performed very well. Meanwhile, core was the definition of mixed results. The largest gainer in the S&P 500 was FedEx, as shares rose 11.71% during trading today. FedEx rose after their nice earnings report from last night. Non-GAAP EPS came in at $2.53 per share, topping estimates by 97 cents. Revenue declined by a slight 2.2%, but still beat estimates by $880 million, as FedEx recorded Q4 revenue of $17.4 billion. The company says virtually all revenue and expense line items were affected by the COVID-19 pandemic. While commercial volumes were down significantly due to business closures across the globe, surges in residential deliveries at FedEx Ground and in Trans-Pacific and charter flights at FedEx Express provided an offset. On top of this, JP Morgan upgraded the stock to a price target of $188 per share, which was previously set at $145 per share. JP Morgan said, quote, "After 3 years of making a point of not applying residential peak surcharges, FedEx will apply them selectively to larger shippers already surging in volume as part of the new normal for pricing capacity." By making the statement several months ahead of the official rate guide for 2021, FedEx is leading on price discipline in an industry where yield compression has already been widely expected. The second best day came from biopharmaceutical company Amgen. Shares rose 8.17% as the U.S. Appeals Court upheld two of Amgen's patents. One of the patents was for Amgen's prominent drug, Enbrel, which makes up 22% of the company's revenue. The biggest loser in the S&P today was Lincoln National, which is an insurance and investment management company. Today they had shares fall by nearly 5.8%. After researching, I could not find a piece of news to support the downward movement in Lincoln National. The other loser of the day was popular financial services company Comerica, which had shares down a similar 5.67%. Again, no news seemed to support the rough day for Comerica. Getting into earnings, we start off with Constellation Brands, ticker symbol STZ, which is a producer and marketer for spirits such as beer and wine, with their most notable brands being Corona Beer and Modelo's. Their earnings were slightly mixed after the company beat on EPS but missed on revenue, albeit by a very small margin. Constellation beat non-GAAP EPS estimates by 26 cents, as they reported a gain of $2.30 per share for the quarter. Revenue was $1.96 billion for the quarter, but missed by an insignificant $10 million. Revenue was down 6.7% on a yearly basis, but adjusted gross margins beat expectations by a considerable amount. After it was all said and done, investors were pleased with the earnings this morning and had shares end the day up by 6.25%. Next up is General Mills, ticker symbol GIS, which we all know is a manufacturer of consumer foods. They own over 100 brands, many of which are very well known, such as Cheerios cereal, Yoplait yogurt, Pillsbury refrigerated dough, and Betty Crocker desserts, just to name a few. General Mills' earnings were basically in line with estimates. Non-GAAP EPS only beat by 4 cents, as they reported a gain of $1.10 per share for the quarter. Revenue also only beat estimates by a minuscule $40 million, after quarterly revenue came in at $5.02 billion, but which was up more than 20% on a yearly basis. Investors seemed to be expecting more, as General Mills had shares end the day down nearly 2%. Lastly, we have Capri Holdings, ticker symbol CPRI, which is a fashion holding company. Some of their brands include Versace, Jimmy Choo, and Michael Kors. Capri had mixed, if not disappointing, earnings this morning. The company missed on non-GAAP EPS by 5 cents for the quarter, after they posted a gain of 11 cents per share. Revenue did beat estimates, albeit by a small $60 million. Revenue came in at $1.19 billion for the quarter and was down 11.2% on a year-over-year basis. Revenue was down 24.5% for the Jimmy Choo business and 17.7% for Michael Kors. Versace revenue rose 55.5% during the quarter. Investors clearly did not like this news and had shares down 1.86%. That is all that I have for tonight. As always, I appreciate your time and want to thank you for watching. I hope you have a nice night, and I'll see you again tomorrow.